Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa, with your Monday, September 30th market recap video here. As you can see here, we've got December corn up significantly higher at 16.5 cents higher at 388 even. November soybeans were up 23 cents today at 906, and D Chicago wheat was up 8.5 at 495 and 3/4. Going to go ahead and get it started off with a disclaimer here. Just remember that everything I'm talking about is not a direct trade recommendation, anything like that. It's just my opinion. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we had corn, soybeans, and wheat significantly higher here on the day. The reason for that, for the most part, was the September quarterly stocks report. And these are the, September quarterly stocks report basically finalizes the 18-19 or the old crop, carry out. So, corn was reported at 2.114 billion bushels versus the 2.42 expected by the market there. Soybeans came in at 913 million bushels versus 982 million expected by the market. So both of those were very bullish, and wheat was kind of a non-event there with the 2.385 reported there, and that was a little bit higher than average estimate. But with that being said, wheat did rally along with corn, with the exception of Minneapolis wheat. So I guess kind of the big shocker to a lot of people was this soybean production number coming in about 116 million bushels less than what the USDA thought the 2018 crop was. So this would suggest that the 2019-2020 carryout should be somewhere in the 520 million bushel carryout range. So overall, I guess the USDA cited demand as the driver for corn. I guess the market had underestimated the amount of demand in the last quarter of 2018-19. So, with that being said, here we had a nice bullish day for the markets. And without further ado, we're going to go ahead and jump into the charts here. We had D's corn up significantly here. As you can see, we tested this 375 region and found sellers there a bunch of different times here these last couple of weeks. Market rallied off the fundamental catalyst here, broke above the 381 level, which was really great to see. Went up to basically closed at the 388 level. We had a high of 388 and a quarter. We did test this 385 mark for a while. We broke through that towards the close. Obviously, I've been talking about the 392, 393 mark for a very long time, basically since this gap happened. I think we're going to go in probably by the end of the week here and fill in this gap at 392, 393. We'll see where we want to go from there. I think broader picture, we've probably got some resistance up at the $4 mark. That's a psychological level. I think between 399 and 401, there's going to be sellers there as well. So, I think there's going to be sellers at 393 for this gap, and there's going to be sellers up at $4. As far as a huge rally, I think that depends a lot on number one, how yields turn out, in the fall in the U.S., and then number two, the South American dryness. I think, if Brazil and Argentina continue to be dry, you could see more appreciation. But as far as right now, I think 393 to $4 is going to stop us. So be looking at those levels in D's corn going into the soybean chart here. We were up, I believe, about 10 to 12 cents here earlier in the ongoings, and then we closed it up 23 cents here at 906 at the end of the day. Really nice push higher. If you notice, we did break through this downtrending line. We did break through this old swing high here from September 16th. So it looks like it's go time for soybeans. We'll see if they want to add on to this rally. I think if we do get since we got our close above this 905 mark, it suggests that we're going to 920. I think if we do get some selling, we should see some support come in at this 901 to 899 region, you would think. Just the soybean market was, bullish on Sunday night into Monday on the news that, the U.S., in fact, I guess the Treasury Department said that they were not, investigating ways to delist Chinese companies from U.S. stock exchanges. That was, I guess they said it was fake news. So, with that being said, basically the soybean market had put on everything it had lost on Friday before the report came out, and then the report just added on those gains. So since we got above 905, I think we're headed to 920 as a potential target in November soybeans, and then on up to 940. So be watching, be mindful of those areas. On the wheat side of things, kind of like the corn market got the breakout there. Really the quarterly stocks report wasn't that bullish really for wheat. But however, it did follow the corn market higher. We did get our rally and close above 491. They did test the $5 mark, which, and they fell off of that. The high was 501 even. We got our close at, 495 and 3/4. So definitely, yeah, some sellers up there at that psychological $5 mark. I think if we stay below there, we'll probably see $5, show some selling a few more times here. But if we break above that, we're probably headed back up to around 510. So definitely, seen some good support there, and we'll see how far the wheat traders want to run it there. Kind of running through these a little bit fast today, but we got the cotton market here. Now, this was real interesting, kind of following the soybeans just a little bit. Obviously, they didn't have a huge report like, corn and soybeans did today, but had that nice push up and went down, and we tested this $60 psychological level. We got our nice strong rally off it on Friday, and look at that. Sellers were able to test cotton lower, and they found buyers right at 60.08. So those low 60s are still proving to be good, solid support there. I guess longs, this is still a bullish formation. If you want to be long, try and be long against the 60 level. If you see it close below this $60 mark, we're probably headed back to a range between 57.50 to 60. So going on into, if I can find it here, the Dees live cattle market. So, we had a pretty good run up here on Friday. Not a whole lot of news to be had here today. But with that being said, though, the market really can't sell off a whole lot. We just had a nice little inside day today. We were down 27 cents to close at 110.30. Market is seeing resistance at this 110.50 region. And that, if you realize that corresponds to this swing low right here on August 5th, 6th, and 7th there. So the 110.50 area is where we're seeing sellers. The sellers obviously can't get too far, though. They tested just below 110 today and got to close basically unchanged in the day. So still watching this 110 region. If we do break above it, we're probably headed up to 111.90 and then on up to 113. So at this point, I would expect if we were to break above 110.50, we'd probably head up to this 113 mark. If you're long in here, you really don't want to see sellers below this 108, or especially you really don't want to see sellers below this 106.35 level where we broke out of initially. So still looking rather bullish for the cattle market. And along with that, the hog market kind of looks like the soybean market. Taking a look here, and that kind of just goes to show you that both of these markets are definitely tied to Chinese exports. And we've seen kind of the same downtrend that soybeans have seen, and we've seen it's the same challenge of that downtrend. With that being said, we're right at the downtrending line for the hog market. We got a nice, we had a test lower today, went down and tested the 68 mark, could not find follow-through selling there. Market ended up rallying there, and on Friday, again, the U.S. did announce, I believe it was the president, announced that they were looking at taking Chinese stock companies off of the U.S. Stock exchanges and looking at limiting some American investments in China and things like that. Over the weekend they said it was not true, so that's why we got our kind of a reversal there. In addition, we did have the hogs and pigs report came out, and that was slightly bearish. It showed supplies at 103% versus traders' estimates at just 102%. So definitely they shrugged the hogs and pigs report off and got a new higher close for the move. I think if we do get a close, we got our close above 71.50. We're probably targeting this 74 region. If we get a break above this downtrending line, it's going to look pretty good for hogs, but we'll have to see if traders can do that. I think if you're going to sell off, you should try to find some support in here at the $68 to $69 level. If we're going to break above here, look for 74 as the first target, and then, I'm going to have to put another resistance line in here, but I guess that would suggest, just looking at this short-handed here, 79.70. So lots of interesting things happening here in the grain and livestock markets, that's for sure. So that's all I've got here. If you guys have any questions, feel free to give me a call at 712-262-7606, or you can visit online at aa-commodities.com. Thanks for watching. Appreciate it.